After the recent Bitcoin correction, you would have come across many theories claiming that this was a reason for why Bitcoin crashed. In today's video, we are gonna cover one of the theories which I feel fits the Bitcoin price movements to the T and is worth considering. So stay tuned to today's video and find out what exactly is the theory and what it states and how it fits on the Bitcoin price action.
Subscribe to watch more videos like this.
Hello friends, my name is Soham and I welcome you to Crypto Bulls Club, your one-stop destination for all the technical analysis and news from the world of cryptocurrencies. If you're new, make sure you hit the subscribe button and press the bell icon. This will notify you with all the new videos that we release, and we release new videos every day. Also, if you'd like to discuss about Bitcoin or any other cryptocurrencies, head over to Telegram and join our family. The link is given in the description below. Also, if you'd like to read about Bitcoin or cryptocurrencies and keep yourself up to date, make sure you visit our website cryptobullsclub.com, wherein we post very interesting articles. Also, if you'd like to get a one-on-one session with our experts and get a review of your portfolio or your strategies, make sure you book a crypto consulting session with us. You can do so by clicking the crypto consulting button on our website and fill up a form. This will be a paid service. Now, let's jump on to today's video. So today we are going to cover a theory which is called the Wyckoff Distribution theory. You can see there are plenty of lines here in the charts. In this video, we are going to explain each and every acronym that you see over here and each of these lines, what do they exactly mean and where the Bitcoin price might be heading. So today we are going to cover the Wyckoff distribution. The Wyckoff distribution was actually formed by Richard Wyckoff in early 1930s because he felt that the rich was actually fleecing away with the normal investor or the uninformed investor. That's why he read the habits or the patterns in the buying process of larger investors or larger institutions and came up with this theory. And he was into the stock market since the age of 15 and he was considered one of the top 5 contributors to the technical analysis of stock markets. Now, let's jump into his theory and what he states. So what Wyckoff stated in his theory was that there's a particular pattern in the way how institutional investors or the people with bigger money or the whales, if we call them in cryptocurrency terms, how they manipulate the market or how they control the market, wherein they make money while going up, as well as they short their positions and make money while the market is correcting as well. So this is something which Wyckoff called as a composite man, because they tend to work as a particular individual does. Okay, so they are a group of individuals or group of institutions. They work in a way in such coordination that it feels that a single person is actually working on the market. So what Wyckoff states is all the fluctuations in the markets and all the various stocks should be studied as if they were a result of one man's operations. Let us call him the composite man, who in theory sits behind the scenes and manipulates the stock to your disadvantage if you do not understand the game as he plays it. So that is very important. If we do not understand what is going on, then it would be harmful to us or we might occur some loss, but it would be of great profit to you if you understand it. So if we are able to understand the complete cycle, how the whales actually operate the market or how the institutions actually operate the market, then we will definitely be able to use them for our profit. Now, this is something that he proposed in one of his distribution charts. This is called the Wyckoff events and phases distribution scheme number 1. So here we have plotted it on the Bitcoin daily chart and we see that there's a match for every particular move. It's a textbook match of the Wyckoff distribution events that was proposed. So what I'm going to do is I'm just going to pop up this image right here. So this will help us in matching every move that has been made. So first of all is this move from the PSY, and let us understand what does this mean. So the PSY is the preliminary supply where large interests begin to unload shares in quantity after a pronounced up move. Now, what we need to understand here is this kind of move is actually preceded by a long accumulation. So in case of Bitcoin, that could be the previous bear market since when the whales actually started accumulating Bitcoin. And at this point of time, so this was around the 8th of January that we had our first correction, and that was the PSY, or the preliminary supply shortage. So what it actually means is they dump the Bitcoin into the market or increase the supply of Bitcoin into the market, thereby resulting in a drop of the prices, as we can see right here. So this week we went up all the way to about $40,000, and then we corrected all the way down to about $29,000. So this was that preliminary supply that we were talking about. Next comes the buying complex. The buying complex, as we can see here, is the phase from this correction right up to the next peak that occurred on February 2021. So let us understand the characteristics. The buying climax is during which there are often marked increases in volume and price spread. So as we can see here, there was a sharp increase in the prices and there was substantial increase in the volume as well. Then the force of buying reaches a climax with heavy or urgent buying by the public being filled by professional interests at a price near a top. Now, this is the time when all kinds of positive news actually comes up. So in case of Bitcoin, we came to know that Tesla is gonna invest in Bitcoin. Several other institutions are gonna invest in Bitcoin. The rumors had it that maybe Walmart was trying to add some Bitcoins, or Facebook also tried. So this was one of these things that actually coincided, and those news actually contributed to the price being pushed up right up to these levels of around 57,000 or so. And this was actually a panic buying stage for retail investors. So they were feeling that institutions are investing, then we should not miss this train and we should get on it, because if institutional money is coming in, then the Bitcoin would reach $100,000 in no time. Now let's understand the next phase. Before moving to the next phase, it also states here a BC often coincides with great earning reports of good news, since the large operators require huge demand from the public to sell their shares without depressing the stock price. So this is the time when actually the larger institutions actually sold off some of their Bitcoins which they had accumulated. Now here I don't mean institutions per se, okay? By institutions I don't mean only the companies that are investing here. I also mean individual whales or hedging funds which were actually accumulating Bitcoin for quite some time as well. So as we said earlier, so this is the phase wherein the institutions actually spread the word in the market, leading the retail investors to invest so that the whales can actually sell off their positions. Now the third stage is the automatic reaction. So the automatic reaction here would be this one. Okay, so this is basically an automatic reaction. Since there is a large supply of Bitcoin in the market, all of a sudden there is a price drop, and from $57,000 Bitcoin came to about $45,000 or even to $43,000 as well. Okay, so this is one of those times after this good rise we came to a correction and people were actually claiming that we should be buying this dip. So this was actually a automatic reaction to the prices. Now the next phase is the secondary test. Let's understand what is the secondary test. So secondary test in which price revisits the area of the buying climax to test the demand or the supply balance at these price levels. For a top to be confirmed, supply must outweigh demand. Now what happened is we got this correction, then we went up again. Here this theory states is the supply should be much higher than the demand, confirming that the top of 57,000 was a previous top, and so that this rise should not exceed the previous top of $57,000. Okay, so the supply is managed in such a way that the previous top remains the top, but it also gives the investors, the retail investors rather, a feeling that the price have started moving up again, thereby giving the opportunity for the whales to actually short their positions. Now let's jump onto the next phase. So the next phase is the sign of weakness. So sign of weakness is observable as a down move to or slightly past the lower boundary of the TR, usually occurring on increased spread and volume. Here what we can see is, so the SOW is right here, okay. So once we went up, then the supply is so much that price again plummets downwards, and this time we make a lower low than the previous one at AR, okay. So we make a lower low, thereby making a kind of a resistance lines at these levels. SOW is the sign of weakness basically. So thereby there's a weakness in the market showcasing that the supply is much more than the demand and the prices continue to fall. Next phase is the LPSY, or the last point of supply. So let's understand what that is. The last point of supply after testing a support on the SOW. So we made a support right here at around $43,000. Then a fee level rally on a narrow spread shows that the market is having considerable difficulty advancing again. So here we made the low, then we started going again up, but again we faced a resistance here, we got corrected. This actually indicates that the market is having some difficulty in reaching the previous all-time high levels. So at this point of time, on March first week or so, the previous all-time high was at around the levels of $57,000 or $58,000. Here, this movement actually indicated that the market is having some difficulty in reaching those previous all-time high, and that's why we corrected again. This inability to rally may be due to weak demand, substantial supply, or both. This theory again examines what could be the reason for this slowness or this weakness in the market. It could be because of the lesser demands from individual investors. Also, higher supply from the whales could be a reason for this. So LPSYs, or the last point of supplies, represent exhaustion of demand and last wave of large operators distribution before markdown begins in earnest. That what it means is, so from this phase right up to this UTAD phase, this is the last phase before the institutions actually short their positions. The complete wave right from here from $47,000, we actually made an all-time high of $65,000. So $65,000 was the last point of time wherein the institutions or the whales actually started shorting their positions. Okay, and then we see a massive correction. So this is the UTAD. Let's understand what is a UTAD. So a UTAD is the distributional counterpart to the spring and terminal shakeout in accumulation TR. It occurs in the later stages of the TR and provides a definitive test of a new demand after a breakout above TR resistance. So basically we had these lines of resistance earlier as well. So this was the premier line of resistance. After this 57,000, we came down, we made a new all-time high of around 62,000, and then we faced this resistance for some time. Then the final stage wherein we broke above this resistance line. So this is the final stage wherein the whales actually started shorting, and there were a bit of hiccups in the market as well, which indicated for retail investors, for smaller investors, that basically this was just another correction and we got a support. We made kind of a double bottom or a kind of a higher low here, and then the prices can start moving up. That is when we actually start moving up before the massive corrections that happen in the last phase, as we can see, and this phase actually continues. What we need to understand is we are currently, according to this theory, is we are currently in the phase E, which is a downward movement, and it may take some time, maybe 6 to 8 months or maybe 2 to 3 years even, okay, in case of Bitcoin, before we see another phase of this PSY starting in. Now these are some of the things which were mentioned by this theory. I came across this theory which actually fits the movement of prices in Bitcoin to the T for every move. So I thought of representing them to you. Again, these are not my personal opinions. These are just my interpretation of the theory given by Wyckoff. So you need to do your own research before investing, and if you want to read more about this theory, what I'll do is I'll actually link this in the description below so that you can read more about this as well. Now there are certain phases as well we'll try to understand. So there are phases from phase A to about phase E. We'll try to understand what each of these phase actually indicates. So phase A in a distribution TR marks the stopping of a prior uptrend. So as we can see here, it stopped the first uptrend. So we came from all the way about $10,000 back in October, November to about $58,000 or $60,000 in the last week of February. Okay, so that is very important time. Now the next phase is the phase B. The function of the phase B is to build a cause in preparation for a new downtrend. During this time, institutions and large professional interests are disposing of their long inventory and initiating short positions in anticipation for the next mark down. So this is the phase B, wherein the institutions are actually dumping some of their positions and which they had accumulated over a period of time, and they are also making the retail investors think that this is just the beginning of the uptrend, and that is when they prepare for the shorts and they start shorting their stocks or inventories, or in this case the Bitcoin, which they accumulated over the last few months or the few years for that matter as well. Now let's understand what is phase C. So phase 3 in distribution, phase 3 may reveal itself via an upthrust or UTAD as noted above. So the phase C is primarily the UTAD. So as we discussed about, the UTAD is the distribution counterpart, basically wherein they don't tend to short at this point of time, but at the peak they short the most of their holdings, thereby making a correction. Now let's move on to phase D. Ideally the phase D is the shortest phase. Let's go to the phase D. So phase D arrives after the test in phase C shows us the last gasp of demand. So as we can see right here, phase D shows the last gasp of demand. So we got a correction right from $65,000 to about $47,000. Then we actually moved up to about, again, crossing the $61,000. So this was the last gasp of demand according to this theory, and phase D actually consists of that. And finally the phase E. Phase E deficits the unfolding of the downtrend. So we have already entered the phase E. As we can see here, we have already entered the downtrend, and according to this theory, this downtrend may actually continue for some time to come. So that's pretty much it about this video. That was about the Wyckoff distribution theory, which I came across on the internet and thought of sharing to our community and the larger audience as well. Do share what you feel about this theory of distribution. Did you know about this theory in the past? Let me know in the comments below. Or have you actually applied this theory in your trading or not? That is also very important, and let us know in the comments below. If you like our contents, please smash the like button. Please subscribe to our channel. Also make sure you join our Telegram channel, because on Telegram we have very healthy discussions, and any of your questions that you have will be answered either by me or someone from our community. So you make sure you join that as well. Also, if you want to read about cryptocurrency and stay up to date, make sure you visit our website and keep yourself up to date. That's pretty much it about today's video. Thank you for watching. Bye bye for now.